A homeowner down payment is the initial payment made by a homebuyer towards the purchase of a home. It is usually a percentage of the total purchase price of the home and is paid upfront, at the time of the purchase. The down payment serves as a form of collateral for the lender and helps to reduce the amount of money that needs to be borrowed to finance the home. Generally, the higher the down payment, the lower the amount of the mortgage loan, and the lower the monthly mortgage payments. In most cases, a down payment is required to secure a mortgage loan, and the amount of the down payment required can vary depending on several factors, such as the type of mortgage, the lender's requirements, and the borrower's creditworthiness. In some cases, a down payment may be as low as 3% of the purchase price, while in other cases, it may be as high as 20% or more. It's worth noting that a down payment is only one of several costs associated with buying a home. Other costs include closing costs, which can include fees for services such as home inspection, appraisal, and title search, as well as property taxes, insurance, and ongoing maintenance and repairs. Closing costs are expenses incurred by homebuyers when purchasing a property. While some closing costs are straightforward and expected, others may be hidden fees that can come as a surprise to buyers. Here are some examples of hidden fees that may be associated with closing costs. Loan origination fees. This fee is charged by the lender for processing the loan application and can be up to 1% of the loan amount. It is often overlooked because it is included in the overall loan cost. Prepayment penalties. Some lenders may charge a prepayment penalty if the buyer pays off the loan early, which can be a significant expense. Underwriting fees. These are fees charged by the lender for evaluating the borrower's creditworthiness and ability to repay the loan. Appraisal fees. Lenders usually require an appraisal to determine the market value of the property, and the buyer is responsible for paying for this service. Title insurance. This is an insurance policy that protects the buyer in case there are any issues with the title, such as liens or other claims. Recording fees. These are fees charged by the county or municipality for recording the deed and mortgage. Escrow fees. Some lenders may require an escrow account for the buyer to cover property taxes and insurance payments. This account usually requires a deposit, which can be a hidden cost. Homeowner association fees. If the property is located in a community with a homeowner association, HOA, the buyer may be required to pay HOA fees, which can be an ongoing expense. It's essential to review the closing cost estimate provided by the lender to understand all of the fees associated with closing on a home. Buyers should also ask questions and clarify any fees that are not clear to avoid any unexpected expenses.